Yes, good people. This is your tutor, CPA Edwin Ochoi, who always does videos in financial reporting and advanced financial reporting through the same YouTube channel. That is a CPA Edwin Ochoi YouTube channel. First thing I could request is that subscribe. And for the CPA students, remember that you did your exam last month and your results will be out most likely by the end of this month or the start of next month. But you don't have to wait for the results to start a new semester, because now remember the period for this semester will be a bit limited due to many activities which will be coming in. Like now we'll be having elections and maybe other things which might arise. So the positive things which might arise. So you are welcomed to CPA Edwin Ochoi online platform that is in YouTube, and at the same time I do online classes that is at evening hours and morning hours in some cases, but mostly I do my classes during the evening, that is 8 p.m. to 10 p.m. in the paper of financial reporting and advanced financial reporting, without forgetting that I have partners in other papers, that is in company law, in QA, in advanced financial management. So generally in all the papers, we can be able to cover if you would be in request of that. So for today, I would like to talk about International Accounting Standards 1, that is under the financial reporting intermediate level, and the advanced financial reporting in the advanced level of CPA. So remember that why am I choosing this International Accounting Standards 1? This is on how companies prepare their published financial statements. This is how companies prepare their published financial statements. So generally this is applicable even to the market, because listed companies, the public limited companies, they have to prepare these statements, and after these statements are subjected to an audit, they will obviously be published so that the investors can base their argument in making decisions. That is, in making the investment decisions. So, which are these statements which organizations prepare? So we have statement of profit and loss, a statement of changes in equity, statement of financial position, and we have the statement of cash flow. So in the preparation of these statements, there is various rules which are supposed to be followed. So starting from the statement of profit and loss, remember that this is a statement of which at the bottom right, we will be able to determine which is the net profit or loss the entity created in a certain financial period. So under the statement of profit and loss, remember that when preparing this statement, there's one main area you need to put more focus on under the expenses. So the expenses are supposed to be classified under various functional heads. So which are these functional heads? Some expenses will be classified under the cost of sales. Some expenses will be classified under the cost of sales. Some expenses will be classified under the administrative costs. Some expenses will be classified under distribution costs, and some expenses will go to the finance cost. Some expenses would have to go to the finance part. So which means that you don't have to show expenses individually in your statement. So, but the expenses will be shown under the cost of sales, administrative costs, we have a distribution cost and the finance cost. Which are some of the expenses which are supposed to be recorded under the cost of sales? So we have expenses like a depreciation. We have expenses like a loss on disposal of an asset. So those expenses of that kind you take to the cost of sales, otherwise told. Because in some questions you will find that the examiner has told you that, for example, if there was depreciation of plant and equipment, you need to classify it under maybe administrative. But if you are not told and there is expenses relating to depreciation and loss on disposal, automatically you take them to the cost of sales. Then we have administrative cost. So which are some of the expenses goes to the admin? So the office-related expenses, office-related expenses. Which are these office-related expenses? Like now you are paying your directors. You are buying stationery. So expenses related to office setting. Then we have distribution cost. Which are some of the expenses you can take to distribution cost? So expenses like advertising, expenses like carriage outwards. So the one which would be facilitating your sales. So those are the expenses you take to the distribution cost. You are paying commissions to your agents. So that commission to the agents, obviously you have to take it to the cost of sale. You have to take it to the distribution, sorry. You have to take it to the distribution cost. Then interest-related expenses are supposed to be classified under the finance cost. That is it. That is it. That is it. That is how you are supposed to do a statement of expense allocation. Then, now you need to understand the format in general, but this one will be well understood once I do a question. There is no impact on that. The next statement, which is supposed to be prepared by these entities, is all about the statement of changes in equity. So for the statement of changes in equity, it shows the movement of equity components. So the changes in equity components. Again, that one will be covered well in a question setting. Then we have a statement of financial position. So for the statement of financial position, remember that assets, the tangible long-term assets, things like motor vehicle, land and building, furniture and fittings, they are supposed to be classified under the property, plant and equipment. They are supposed to be classified under the property, plant and equipment. So the tangible fixed assets are not supposed to be shown individually under the non-current assets, but they will be recorded. They will be recorded under the property, plant and equipment. So which means that you have to do a separate working. You aggregate them. You get one figure as property, plant and equipment. But for the other things, like now the current assets and liabilities, those ones you just record in a normal way. So those are the three statements I will start with. That is the statement of profit and loss, statement of changes in equity, and the statement of financial position. Then we have a cash flow statement, but that one I will be able to cover it separate, even if it's part of a published statement. Because even in an exam setting, they always test that question of cash flow separately from the three other statements which I have mentioned. So to understand well about this International Accounting Standards 1, which is covered both in the advanced level and the intermediate level, and at the same time, generally, even in the SCCA and another accounting field, those are the rules you are supposed to follow, because these are rules provided by the International Accounting Standards Board. So let us do one question of December 2021 from the financial reporting CASNEB exams. That is December 2021, question 5. Question 5, that is from the financial reporting CASNEB exams. To be specific, CPA. So let us check on that question so that we can be able to understand well what you are required to do. So let us look at that question. Let us look at that question. They were saying that the following trial balance relates to Bawabu. The following trial balance relates to Bawabu. So it was a statement of Bawabu, whereby you are provided with a trial balance. You are given a trial balance there. Then after being provided with a trial balance, you are given additional information. So I will start by interpreting the additional information, because now in any published accounts question, you have to start with the working, the interpretation of the additional information. The interpretation of the additional information, whereby after interpreting the additional information, you will go ahead and do the statement of expense allocation. Then now you will go forward to present what is required, either a statement of profit and loss, or a statement of changes in equity, or statement of financial position. So in our question, the first thing they were saying that on 1st April 2020, the directors of Power Limited resolved that the financial statement could show an improved position if the property was revalued to market value. At that date, an independent valuer valued the rand at shillings 160 million and the building at shillings 485 million. So in short, there was a valuation of rand and buildings. So what we need to check is all about if there was a revaluation gain or a loss. If there was a revaluation gain or if there was a revaluation loss. So that is my first working. So number working 1. So we need to check revaluation gain, the revaluation gain stroke loss, the revaluation gain stroke loss. So one column we have rand, we have building. So you start with the revalued amount provided in the additional information number 1. We have the revalued amount. So the revalued amount for rand, as per additional information number 1, we have 160,000. And remember that this is a question of December 2021. FR, CPA, that is financial reporting, CPA. So we have 160 and this is 485. That is from the additional information number 1. You have been told that as a third date, that is 1st April 2020, an independent valuer valued the rand at shillings 160 million. The building at 485 million. So that is the revalued amount. So to determine if there is a revaluation gain or a loss, you just go direct and compare what you were provided in the trial balance. You compare with this revalued amount. So we check the net book value. Net book value. So the net book value of rand, remember that the rand will be at cost. Remember that the rand will be at cost. So checking in the trial balance, I can be able to see there is somewhere we are provided with property at cost. Remember that the property contains rand and building. So they have said property at cost. In brackets, they have given you land. So which means that there is land of 146,000. So which means that for building, because the total value for rand, the total value for land is 146. But the total value for property, generally property was 732 minus 146 to get that figure of 586 for building. But now we need to subtract accumulated depreciation to get net book value. So the accumulated depreciation given in that trial balance for the building is 122, is 122,000. That is 122,000. So 122. So that is 464,000. So that is 464. So I can see there was a revaluation gain from 146 to 160, from 464 to 485. So the difference is 160 minus 146. So this is 14,000. So that is a revaluation gain. A revaluation gain. So then 485 minus 464. So that is 21,000. So that is 21. So the total revaluation gain will be 35,000. Will be 35,000. This one will be taken to the other comprehensive incomes in the statement of profit and loss. Then in the same additional information number 1, after evaluation of the building, you were told that in the second last sentence there in note 1, you were told that the remaining life of the building as at that date was 25 years. So which means that you can be able to get depreciation. You can be able to get depreciation. So working 2. So working 2 is all about depreciation. So depreciation, so the one for building over the useful life, that is 25 years. After evaluation, we have 485,000 divided by 25 years. You divide 25 years. So 485,000 divided by 25 years. So that is 19,400. That is 19,400. So then the next thing we have is additional information number 2. Again, there was a depreciation of plant and equipment. Depreciation of plant and equipment. Reducing balance method at 15%. That is what you have been told in note 2. In note 2, 15% using reducing balance method. So which means that I will go back to the trial balance and check the cost and accumulated depreciation. The cost and accumulated depreciation of these plant and equipment. So the cost is 427,000. I minus accumulated depreciation of 85,400. So I minus 85,400. Then I multiply now with 15%. I multiply with 15%. So that is how you do the reducing balance method. But this first method of taking the value, dividing the remaining years, remaining life, is called straight line method. But this one, whereby you take the cost, you minus accumulated depreciation, then you multiply with the depreciation for the year to get so you multiply with the depreciation rate to get the depreciation for the year. That is the reducing balance method. That is the reducing balance method. So we have 427,000 minus 85,400 times 0.15. So that is 51,240. So that is 51,240. So these two will be taken to the cost of sales as guided by the additional information. That is what we were told in the additional information number 2. Or depreciation is to be charged to the cost of sales. And number 3, they were saying that Bawabu estimated that an income tax provision of 113.8 is required for the year ended 31st March 2021. So income tax provision of 113.8 is required. Then they continued saying that the balance on the current year's tax in the trial balance represents the understroke of a provision of tax liability for the year ended 31st March 2020. As at 31st March 2021, the tax base of Bawabu Limited, its net assets, was 292 less than the carrying amount. So the income tax rate of Bawabu Limited is 30%. So in short, in that working number 3, what the examiner was testing you is all about, do you understand the aspect of doing tax while considering the current tax and the deferred tax. So income tax is equal to the current tax plus minus increase or decrease in deferred tax, plus tax under provision plus tax under provision, U minus tax over provision, U minus tax over provision, U minus the tax over provision. So for the current tax, you were given direct because that is the tax for the relevant year, the tax payable in the year 31st March 2021. So the provision with it said that Baobab Limited estimated that an income tax provision of 113.8 million is required for the year ended 31st March 2021. That is a current tax for that relevant year. 113,800. So let us look for the deferred tax. So we always say that deferred tax is equals to the temporary difference. I will write in short. This one is temporary anyway. Temporary differences times tax rate. But you need to know that under the temporary difference, we have two types of temporary difference. We have the taxable temporary difference and we have the deductible temporary difference. So for the taxable is whereby you find carrying amount is greater than the tax base. Carrying amount is greater than the tax base. Because temporary difference itself is all about the carrying amount minus the tax base. So one type of temporary difference is the taxable temporary difference, whereby the carrying amount is greater than the tax base. Then for the deductible is whereby the carrying amount is less than the tax base. The carrying amount is less than the tax base. Of which, in our question, you can see that in that last sentence, in the additional information number 3, they said that as at 31st March 2021, the tax base of Baobab Limited's net asset was 292, less than the carrying amount. So the tax base was less than the carrying amount. So which means that the carrying amount was greater than the tax base by 292,000. And once you have temporary difference, because here we have temporary difference, which is a taxable temporary difference. What you do, you take that taxable temporary difference, you multiply with tax rate of 30% as given in that additional information. So 292,000 times 0.3 times 0.3, that is 87,600. Then we compare with what we have in the trial balance. So in the trial balance, there was a deferred tax of 97,600. So you can see now, at the end, we have 87,600. So there's a reduction by 10,000. There's a reduction by 10,000. So this is from the trial balance. And this is what I have computed here. So which means that I will be able to take my 113,800, which is the current tax, I minus, because this is a decrease, I minus 10,000. Then for the tax under provision, a tax under provision, this is, for example, in the previous year, you were supposed to make a provision for the future taxes of 10 million. You made 8 instead of making the provision of 10. So which means that you underprovided by 2 million in the previous period. So which means that in this year now, you have to increase your provision by the 2 million you underprovided last year. So which means that that 2 million will be an expense to you because you are making an extra provision. So in short, tax under provision is an expense. Tax over provision is an income because you overprovided in the previous year. So your provisions for tax in the present period would be less. So you know that in the trial balance, an expense is debited. an income is credited. So we need to check, because they said in the additional information number 3 that the balance of the current tax in the trial balance represents the understroke of a provision. So we need to check if that current tax in the trial balance, is it on the debit side or the credit side? So if it's on the debit side, it's an under provision. If it's on the credit side, it's an over provision. Checking the current tax in my trial balance, I can be able to see that the current tax balance there of 12,800 is on the credit side. So which means that the 12,800 is an over provision. And an over provision, we are supposed to do what? To deduct. So we minus 12,800. We minus the 12,800. So 113,800 minus 10,000 minus 12,800. So this is 91,000. So this is 91,000. Then the last additional information. So this one was additional information number, so already I recorded here, additional information number 3. So we have working number 4. Whereby they said that in the additional information number 4, they said that there was a bonus issue. So Bawab Limited made a 145 bonus issue on 31st March 2021, which has not yet been recorded in the books of the company. So the company intended to utilize the share premium as far as possible in providing for the bonus issue. So which means that the bonus was 145, that is 145 bonus issue. So which means that for every 5, you are given 1. For every 5 shares, as a shareholder you are supposed to be given 1 share for free. How many shares were with the shareholders? We check the ordinary share capital in the trial balance. We divide with the par value to get the number of shares. So checking on the ordinary share capital in the trial balance is the first item in the trial balance. That is 560,000, and the par value you can see there is 10. So which means that the number of shares with the shareholder is 56,000. So how many shares did they issue through a bonus? How many shares did they issue through bonus? So I say 56,000 times 1 over 5. So I will be able to get 56,000 divided by 5. So that is 11,200 shares were issued through a bonus. So 11,200 we multiply with shillings 10, the par value, to get the value. So that is 112,000. So that is 112,000. That is the 112,000. So the last thing I will be doing is all about the statement of expense allocation. After doing the interpretation of the additional information, I have to do now the statement of expense allocation, so that from that point we can be able to go direct and present the statement of profit and loss and the statement of financial position. A minute. So we can be able to continue. So let me clear this side. But remember that I will be using this 35. So I will be able to record 35 somewhere here. So that is the revaluation. So this is my revaluation. That is the one I will be considering. Then we have depreciation. We have depreciation of building of 19,400. And we have another depreciation for plant of 51,240. That is the things of value in this side.